Hi, it's Jim Parker. Please do me a favor. Right below, you're going to see a subscribe button. Click that subscribe button so you can subscribe to this YouTube channel. I'd greatly appreciate it. Just take the time right now, put the video on pause, hit that subscribe button. All right, enjoy the upcoming program. Welcome, fellow business brokers. Today, we're going to talk about the Payroll Protection Program. Before we begin, I want to say this, and we'll get more into it later on in the program, but later on, I am going to be asking everybody on this program to be signing a petition. And I'm going to be emailing everybody after this program a link to that petition, and I ask you to please sign it. Not only sign it, but try to get every business broker you know to sign it, every lender you work with, every closing attorney you work with, every CPA, all the business owners that you know, whether you've got their business listed for sale or not, buyers, send it to your mom, send it to your dad, send it to your grandma, just get everybody you can possibly get to sign this petition. If there's one thing that we do as an industry this year and we pull together to do, I think it's getting this petition signed. A few months ago, we got another petition signed. We had over 1,000 signatures. I was really proud about that. A few days after we ended it, we ended up getting it passed. I don't know if we had anything to do with it, but I like to think that we had some part to play in that. But this petition, I would really like to aim for 10,000 signatures, and we got to get everybody on board for this because it will affect you. There's 4.3 million businesses in the United States that have gotten PPP money. So I don't care if you're doing SBA loans, you're doing owner notes, all cash deals, if you're doing $50,000 deals or you're doing $10 million deals. You are, if you're being active as a business broker, you are going to be coming across situations with PPP monies. And we really need to figure out this situation. In today's program, we're going to be talking about two things when it comes to the Payroll Protection Program. The first one being forgiveness of the PPP, how that's going to work, how that's going to operate. And the second one being, when you've got a deal going on and you got a buyer and a seller under contract, how do you handle those deals that got PPP monies involved? And I'm going to tell you, you're not going to like everything that we talk about today, and we don't have all the answers for you today. And it comes to one of those things, do we continue talking about this subject and have this program today, or do we wait to have all the answers and then have a program on this subject? And there was no question in my mind what we should do. It was, we have to have this program, because sometimes it is just as important to point out problems that we're going to experience as business brokers out there, even if we don't know the answers or have the solutions yet. Because at the end of the day, it's very, very important that we don't get sued, our buyers don't get sued, closing attorneys don't get sued. We just got to make sure we're on the same page. Well, anyways, I want to introduce our special guest today. And our special guest is Monty Walker. And if you're familiar with this program, usually at this time, I put the video on our guest and I give a formal introduction of that guest. Before I give the formal introduction of Monty Walker, I want to give an informal introduction of Monty Walker. Monty Walker is probably, most likely, the most recognized CPA for doing transactions in our industry. He has done so much for our industry. He's been extremely active in the IBBA and the M&A source. And every IBBA member and M&A source member that I know considers him to be one of the best instructors that the associations have. So if you're not familiar with Monty Walker, it's probably because you're not a member of the IBBA, and I highly suggest you join the IBBA. It's a wonderful organization. The training is superb, and you just got to get more active in the industry if you don't know Monty Walker. So I'm going to go ahead and do my formal introduction of Monty Walker now. How you doing today, Monty?
I'm doing well, thank you.
Doing good. All right, excellent. All right, so Monty is the founder and owner of Walker Business Advisory Services, and he's out of Wichita Falls, Texas. The company's flagship and most sought-after service is its business transaction advisory services. Monty is considered a business transaction CPA, handling the unique financial, tax, planning, and procedural matters associated with buying and selling a business. Monty speaks nationally on various business topics. He spoke before the United States House of Representatives Small Business Committee on the topic of how tax complexity hinders small business. That's a mouthful. He spoke before the United States House of Representatives Small Business Committee on the topic of how tax complexity hinders small business. That's quite an honor, Monty.
It was a great opportunity.
I don't know if I'd want to watch that on C-SPAN, but that's a great honor for you. I'm just kidding you, Monty. I'd love to watch. I would have loved to watch that. So, hey, Monty, I really appreciate you joining us today. I want to apologize that I didn't give you even a better introduction. I could have spent an entire hour just giving the kudos to you and your accomplishments in your industry and our industry. But if anybody wants to learn more about Monty, they can visit him at his website at walkeradvisory.com. And when this goes to YouTube, we will have that website up every time Monty's talking.
Great.
So, Monty, let's begin by talking. We're going to talk about two things. Like I said, the first one is going to be forgiveness of the PPP loans. The second one being how do we handle transactions that do have the PPP loans. The new regulations or the new provisions for the SBA PPP monies is saying that they have up to 6 months to grant that forgiveness. And I'm hearing that it could take up to 4 to 6 months for that to actually happen. Is that what you're hearing?
That's what I'm hearing. Yeah. I think they finally realized they probably needed to have the time frame out there. But think about how many loans got issued and how fast they got issued. Now they're depending on the lenders to come back and proof up all the forgiveness information. And you're also depending on the fact that these business owners are going to have good records. And so how many of us have ever been in a transaction where the average everyday business owner has great accounting records? It's typically not the case. So I think what will happen is a lot of these people are going to maintain their records the way that they typically do. They'll probably go to the lender to try to get their forgiveness done. Then they'll have to go back. So that brings it to probably, should they be trying to do this on their own? Probably not. They probably need somebody to work with them. Yeah. So having an accountant, right? I think this is probably one of the times when they probably will do well to put the money out, to have somebody compile the data, make sure that they're correct when they go in. It'll make it easier on the lender. And the lenders don't want to spend any more time with this than necessary. So if they can just bring it in, good, clean package, the processing will go quicker. But I absolutely believe it's going to take every bit of time that is out there now to get this done. And it may require an extension, be quite honest. You get the flood of all this coming in, it just very well may take more time than what they've already got down there.
Right. And I got to say, Monty, and I'm not just saying this because I have you on the show and I want people to realize this. It's how I really feel. I mean, this is a huge thing, is getting this PPP money forgiven. I don't think a business owner should be doing it on their own. I think that they should have a CPA like yourself do it, or an attorney do it, have somebody do it, probably more likely to see CPA. But I wouldn't, if I was I am a small business owner, I'm not doing it at all.
No.
I have my CPA to do it. I just think you're crazy not to. It's too much.
Chances are you're going to do something that could be wrong. I mean, the application's not that onerous. I mean, it's fairly straightforward. But the fact is, a business owner, they did not go into business to deal with all this paperwork. And most of the business owners that I deal with, when they think about the accounting, it's a necessary evil. If it's got corporate stuff involved with it, it gives them a headache. So how many of them are going to really sit down and do this properly? Not most of them. They're going to look to somebody else to do it. They just need to bite the bullet and pay somebody and have them take care of it.
Right. It's totally worth it, the amount of risk. Now, okay, so I hear that on June 16th, they've been making a lot of revisions to the forgiveness application over the last month or so. I heard that the last one they did was June 16th, I believe it was, and the application went from 11 pages to 5 pages. Is that correct?
Yeah, pretty small. Are you talking about the one where they did the extension? Are you talking about the most recent one where they did the extension?
No, I'm talking about just the one from 11 pages. I remember looking at an application that had 11 pages,
yes.
And then they kept reducing it. And I think the last one, June 16th or so, they reduced it all the way down to 5 pages. And I was like, that's fantastic.
Yeah, it makes it a lot easier. But there is something to be said for having detail. I think this right here has been it's been unique, because how in the world do you have this kind of money flowing and have such simplified requests? And the problem with it is you have such simplified requests, simplified forgiveness information, but yet they're sending signals out that, hey, if you don't do things right, you may not be able to get forgiven. If you don't do things right, you may not. You may be challenged on the legitimacy of your loan request. And well, the more detail you have, the more likely you're going to do things more correctly, just simply because you're trying to comply with a lot of your information. They shrink it down, it's a lot less there, and then all of a sudden they hit you in the end saying, why didn't you give us X? Well, you didn't ask for it, or well, I didn't understand that simple question. So there is something to be said for details.
Right.
Yeah, they shrink it down. It is.
Yeah.
It's a little odd, but they got shrink down.
You probably don't know this. Do you think they'll reduce it anymore? Continue to make it more simpler, or no? You may not know that.
I don't know, but I cannot fathom that you would make it simpler. Has anybody in this, us talking here and anybody listening, seen anything as simple as what it already is for the kind of money that was flowing? I just cannot see it. They might as well do what they tried to do with the tax return. Remember that? It was going to be a single postcard. Yeah, they made the front page look like a half a page postcard, then they gave you like 35 support schedules. Yeah.
No, that's funny. That's funny. Now, so I know they haven't passed this yet, but there's been a lot of talk about it. They're talking about every PPP monies that was under $150,000, just allowing the banks, because right now, if people are listening, need to know is that it's the SBA that needs to forgive the money. It's not the bank. And so what they're talking about right now, and it's probably going to be a bill, I would imagine, and it's going to become a law, but if it's under $150,000 of PPP money, then it's automatically going to be forgiven, or it's at least left up to the bank to decide if it's forgiven. Is that still being talked about?
Yes. That's the 150 and the $2 million limits. I can see why anybody over 2 million should be looked at. That makes sense. They want to verify the legitimacy of that. So I think that should be done. There should be a safe harbor too. There's a limit. When you start talking about the billions that just moved, how much time are you going to spend on 100,000 or 150? That's the smaller end of the scale. So I do think that they should end up bringing that in 150, under 150. Maybe actually it's probably a little low at 250, something like that. Seems more realistic, that they give them full flexibility. It's your safe harbor. If you're at that, we're letting this thing ride. The bank confirms a few key points of information. If it fits the criteria, then great. But yes, I'm seeing the same thing. It's going to be
I think they're going to have to. There's 4.3 million, PPP loans out there. There's no way the SBA is going to be able to go through 4.3 million loans. So it would take longer than 6 months.
Yeah. Of course, then you have the gulf. You have that low end and you have the upper end, and what happens in the middle. And the regulations actually say that they can check any loan that they want. So everybody can have a loan check. So if that's there, you got to do something to say, we're not going to look at X. So eliminate the small end of it. And that happens in other areas of practice. You have a safe harbor. If you're in that window of that safe harbor, then you don't have to do certain things. And I think that needs to happen here.
That's good. And then if it's over 2 million, they're making, those are going to be automatically audited, is what they're saying will happen.
Yeah, well, the term audit and reviewed, I think that's, there's a limit. If you go into a full-blown audit, you're looking at a fairly intense analysis. Having been subject to an oversight or review process is a different deal. So I kind of question, when the terms are being used, what that actually is going to end up being. Yeah.
Okay. So you're a CPA, and I've gotten this question earlier in this week, and we addressed it a couple shows ago, but maybe we need to address it again. How is the PPP monies handled on the financial statements, the P&L and the balance sheet?
Well, there's two ways of addressing that. How should it be handled, and how is it being handled? That would be the correct way. Now, this is a loan. I'm sure it's simple. It's a loan. And the appropriate accounting for a loan, you book it up as a liability on the balance sheet. So when it comes in, deposit the funds up, book it up as a liability. You then ultimately, if there is a forgiveness of that debt, then it removes off of there, and you'll just essentially flow it down to the equity section of the balance sheet. That money should not find itself on the income statement unless they're unless it has to turn into income. I guess if they have to. Now, I don't see how that would happen. We're talking taxable income because you got two things happening. You're going to have, well, you have one thing happening. You got the money coming in. It should be accounted for as a loan. And then you're either going to remove the loan, put it back, put it into the equity section of the balance sheet, or you'll remove the loan by paying it back. So should it ever really show up on the income statement? No, it's not. It shouldn't show up on the income statement. Now, the other part of this, when you start seeing this, is, all right, what happens for the forgiveness issue? Now we have a problem. If you don't get, when you have forgiveness of a debt, typically you've had debt forgiveness income. We now know that that's not going to happen. This debt does not create debt forgiveness income. Debt forgiveness income is not an income statement recognition item. That's a tax matter that happens on that. So I don't see why anybody would flow this through their income statement. Flip side of that problem, we have expenses. So aren't we creating havoc and recasting? We have no income, at least for that amount of money. We have all the expenses that are there. So we have two different things happening. For general accounting, those expenses are real. For tax, now we're getting, I think everybody has probably seen this, heard it, getting information on it. For tax, we're hearing out of the IRS that they're saying, hey, denial of double benefit. You will not get to take that deduction. I can answer. I don't know if you had this question or not, but I'll throw my hypothesis.
Monty, if we can pick your brain, I want to pick your brain. So
let's think about this issue here. How do you have a denial of double benefit on something that you typically would never see in the courts come back and say, hey, if you have a debt forgiveness, that denies you to have the ability to take any deductions that you may have had related to that income stream. Since we're talking loans, I mean, if you go out and you have an SBA loan and you somehow didn't have to pay it, something happened, you didn't have to pay it, and you also were forgiven the bill requirement of the debt. You were insolvent, the things that came down that you were able to deny. You then are not denied the ability to take a deduction for the expenses that that money was used to pay. You're not denied that. Now, how come that's happening here? This in itself is already a loan, right? If it's already a loan and you could have to pay it back, but ultimately you don't, the IRS's position is to denial double benefit. Do I concur with the IRS's position? No, I don't. But here's the fact. Even though I don't concur, and I know there's going to be several law firms out there, I think, that have put out their own hypothesis on this thing. If you don't concur with it, the problem is the IRS is the 800-pound gorilla. So if you don't concur and you do take the expenses, then you're going to be in a one-on-one battle with the service in the event they wanted to challenge what you've done, and they only do that if they catch it, right? But so I think one of two things. I think it's either going to be this. One, Congress has got to pass some legislation that allows that deduction. The IRS has already put out a revenue ruling that says that it won't be allowed. Whatever your PPP forgiveness is, you have to take that much off your expense line. So if the IRS has already said you can't do it, and you do it anyway, all you're doing is putting yourself one-on-one against the service. If they challenge you, you're going to be paying somebody to go to court. And so there needs to be some effort put out to try to get our representatives to get this pushed through Congress. And after the IRS came out on this issue, there were a handful. I mean, I'm talking about 2 or 3 people that really came out and said, no, we're going to try to do something. They started talking about it, but nothing's ever happened. So we haven't seen any legislation coming down the pike to get this deductible, but that's what has to happen. Even though it doesn't make sense, it should be allowed, and a position could be that, no, the IRS isn't right. It doesn't matter. Who wants to battle one-on-one with the service? I mean,
you're absolutely right, Monty. But, you're looking at this too, I think ever since the CARE Act was passed in March 27th or whatever it was, things have changed in our industry like every couple of days. And I think you're right, that they're going to eventually change that. They had to get this out quick. They had to make a move quick. They couldn't think about everything that they were going to do, up front. They moved quick. I think they did the best job they could at the time. And now they kind of have to clean up some of these issues. And that's one of the issues that they need to clean up. And you think it's going to happen, right?
It should. I mean, there's been enough discussion so far, but it's not been at the level that it should be. Why did the last update that came out where they increased to 5 weeks for up to August, 8th, I think, to file for PPP. Why did not something get integrated then? There's opportunity for this stuff to have been placed in there. So the longer it goes, the less likely that would happen. And the IRS may just end up having that as our de facto. But I think people need to watch it. If they can send notices requests into their Congress people to deal with that, it needs to be done. But it's a challenging deal. The deduction should happen. Unfortunately, right now it's not allowed. And who wants to be caught one-on-one having to deal with the service coming after that when they put out a revenue ruling on it? And if Congress doesn't make a change, I think you just have to back off on the deal, and you're just going to have to suffer with it.
I mean, so on the recasting, business brokers listening right now, what do you suggest that we do on the recasting on the income statement? Do we actually put that money in there, or do we just put a note at the bottom of the recast statement? How do you recommend we handle that?
I tell you, that's a bear. If looking at the operational side of this business, if it was clear that there was ample dollars moving through there to keep everybody paid, but they still qualified for the loan, then I think there's going to have to be a challenge to say, do I remove the expenses or include the income that came in on that loan to keep that recasting showing the way it should? You don't want to have this for sure. If there was no way of keeping the people employed and covering the expenses without the PPP loan, appropriate recast, if you're not going to have the income, but you use that loan to pay it, you should back off on the recast, you should show an add back for those expenses. That's a direct in your face, and it could be a one-time deal. I'm not talking about going and removing the line items. You keep the expenses exactly the way they are. Then you have a one-time add back dealing with this event, so it's in the face of the buyer. So I do think you have to adjust, because keeping in mind there should be no income showing up for this, and if it is, the accounting's wrong. I mean, that first of all, right. If anybody sees this loan showing up as income, you should immediately tell your client, hey, this is not right. You need to get your accountant to adjust this thing. We can't take this out with this income here. And then you do an add back for a one-time event to show that, to try to make the numbers look more realistic.
I'm glad you said that, Monty, because that's what I've been doing. So I'm glad I got confirmation on that. And I think every business broker that's listening right now, I think that's really important, because we're going to be dealing with this. I mean, most of the business owners that we're going to be dealing with moving forward, or a lot of them, will have this issue. So we got to keep that. Is there anything else you want to talk about as far as forgiveness? Because I'd like to move on to how to handle a sale of a business.
No, the forgiveness issue will be something that's out there. I would encourage everybody to read a little bit on this. Make sure that you're aware of the forgiveness application. You are going to be dealing with businesses that are facing this issue. So if you know you're going to be dealing with it, you should be somewhat familiar with the elements of it, because there's a good chance that you might be getting asked about that. Now, you should be a business transaction advisor in kind of the global concept of it, not just a facilitator, not an intermediary, just all alone. So if you're in here dealing with a seller and you're having to contemplate, what are we going to do to get the business sold? How are we going to address this? Having this information in your pocket to even understand the forgiveness elements is critical, because it'll just draw you tighter with them, because the chances are very good you'll know more if you take time to review it than their own accounting people may know. And the fact is, you need to know more than you do to tell them to go talk to their accountant, because it's impacting what you're doing in the deal. So right. I think people need to get real educated on what's happening with this, because it's not going to be a big deal now, but the latter part of the year, that's where it's going to be showing itself.
And I agree. And I got to say this, Bonnie, tell me what you think. As a business broker, I agree with everything you're saying, except I would not take the step of actually filling out the forgiveness application.
No.
At all. I wouldn't do that, because I'm not a financial advisor. I don't get sued or.
Yeah, that's an accounting type move, and you just said a financial, no, but be able to have discussions, know the issues, be able to talk to the clients about how this would impact them. That's where you have to have your knowledge base, not to complete it. You don't want to get caught.
Okay. Yeah. All right. I just want to make that clear to people listening right now. Don't get involved with that. I do want to move over to this, because this is the most important thing we could be talking about right now. And Monty, how do you suggest we handle the sale of businesses if there's PPP monies that were involved? that are involved. The business owner went out, got PPP monies. Now they put it up for sale. You got a buyer that's interested in buying it. We got it under contract. How do you suggest we handle that?
This is something that's starting to rear itself.
Big time.
Yes, the applications that were used to, or not the application, the actual loan doc that was used to issue the loan, there pretty much you're seeing that there was something there related to ownership changing. I reviewed a few as I came into this just to refresh myself, and the ones that I had in my file made no references whatsoever to asset sale changes. There was nothing there that caused an issue with that, but it was very clear that the company merged, had an ownership change, a reorganization. If it was clear on that. So that meant, at least under those loan docs, that if there was an equity deal at play, that there needed to be some discussion with the lender. Now, the oddity on this is they would have to take this back to something that had been almost feels like it was fraudulent, because there's no collateral, there's nothing to come pull. They could call the loan, but I mean, where do they come? There's no personal guarantee. So look at the issues. I mean, this is convoluted. That's what happens when you get real simplified paperwork, right?
And there's not even a personal guarantee, but there's also no lien on any of the equipment or assets of the business.
That's exactly right.
So
this would really have to be attacked at a level that says that there was an intent to misrepresent things. You didn't follow. I don't know how that could be. So, and in the transactions I've dealt with, legal in those deals have kind of concurred in the same thing. But the fact is, you would never intentionally, at least you should not intentionally go contrary to the lender. I mean, that's just, you should not. I believe that. I think you take a straight line with a lender. So follow the paperwork. If the paperwork does so state that ownership changes those issues, not asset sales. I'm still talking about the equity pieces of this. If there's relevancy there, that there needs to be some communication about that, there should be. And there should be direct dialogue with the lender. We're looking at selling. Here's what's going to happen. If you find the same thing in the loan doc related to asset sales, you cannot sell the assets of the business. Some of the ones I've seen didn't have that. So if that's there, you may have to face it. I can tell you, I've advised on transactions now where asset sales have gone right on, no problem. And legal in the deal said, there is nothing here that mandatory says you can't do it. Okay, no problem. There was I've advised on a couple of deals where they were doing some equity. The lenders didn't have an issue with that. They did require that the seller, the person that was there to do the paperwork, initially be available to handle and take responsibility for certain forgiveness issues. Okay, so that was a unique piece. They wouldn't let the thing fly with just letting somebody else come in. They did require the initial party to stay on the hook to make sure that things did get properly filed, which I think is appropriate. That would probably be appropriate.
So Monty, what's happening a lot in our industry right now, and you're probably familiar with it, and I want to make sure that everybody watching the program right now is familiar with it. But what's happening with the asset sales is that they're putting monies, let's say that there's $80,000 of PPP monies that the seller owes. They close on the business, but $80,000 is being held back in escrow account. And if it's forgiven, then it goes to the seller. If it's not forgiven, then the 80 grand would then be used to pay off the PPP. Do you concur with that, or?
I think that I do. The deals I've had, even interfacing on this that came out, the lender wasn't specifically mandating that be done. There's one of them where that happened because the negotiation between the parties did that. It was the seller who was concerned that the buyer may use some of those funds inappropriately. And so the buyer, so in the arrangements, they mandated that X amount of dollars would be put up and held to ensure that there would be no problems with that. And that wasn't a lender issue. That was a negotiable issue between the parties. So no, I concur with that. Even if there's no issue with the SBA, or the lender. But if you go to the lender and the lender lets you fly through it, I think you just roll with it. If the negotiations that the only way they'll let you do it is to put some funds up, then I think that's appropriate. But if the loan paperwork has references to either the equity changing being a potential default issue or a sell of the assets, if either one of those are referenced, The lender needs to be involved. You don't try to skirt those edges.
Yeah. And I don't think you should play in the gray area. You don't want to end up getting, sued down the road. I think it's very important for everybody to understand this when they're working on a transaction. Again, it's not the bank that gives the forgiveness of the loan. It's the SBA that's going to have to give the forgiveness of the loan. So when they started doing the PPP monies, the SBA did not have a promissory note. Each bank created their own promissory note. I guess the SBA had one, but banks were creating their own promissory notes. And I guess I've heard from some brokers and from some people that there was no promissory note at all, which is unbelievable. Those banks really dropped the ball on that. But so we're not talking about the SBA having a uniformed promissory note for every PPP loan out there, where we can sit here today, me and Monty, and say, hey, this is how you should handle the transaction because it says X, Y, and Z. What you need to do as a business broker, and this is extremely important, is you've got to ask the seller. Monty, tell me if I'm on base or off base when I get done here. As a business broker, you need to ask the seller to give you a copy of the promissory note. When they actually signed, they applied for the loan and then they got, something back probably through DocuSign or something. They actually had to sign the documents. Those documents, you need to get a copy of those. And if the seller does not have those documents, they need to contact their lender and get those documents, and then take those documents. You can read them over yourself as a business broker, but I would not interpret them. We've got to remember two things. We're not attorneys and we're not financial advisors. So we can't give legal advice. We can't give financial advice. Take those documents and get them to the seller's attorney or to the closing attorney, and get the closing attorney or the seller's attorney to say how that transaction should happen. And I would disclose to the seller why you're doing it, what the ramifications can be. And because in some instances, from what I'm hearing, that the banks are saying if you do not get consent for the transfer of the business, if it's an asset sale, I know Monty's seen other things, but I'm hearing this from other business brokers around the country, that if they don't get consent from the bank, that the monies will become due immediately and have to be paid immediately. If you close, so meaning if you close on that business, there's no forgiveness, the monies are due immediately. And you don't want to put your seller in that position. And that's where it could open up into a lawsuit between you and, whoever else is involved in the transaction. Monty, what's your thought on that?
That's a suggestion on what happens on the default. So if somehow you've defaulted on this provision, supposedly, that's the concept, that supposedly you lost your right to get the forgiveness done. Because it would suggest that there's been some action taken that was contrary to what was agreed to be done in the application process. So somehow you've misappropriated the funds if you've gone into default. So do you really want to challenge it? That's really, I think there's some room to argue whether that's really true or not. And they don't have any collateral. How are they going to get it? It doesn't matter. What are they going to do? I think a lot of that can be argued, but I don't think anybody wants to push the button that level. You want to go in and get everybody to speak about it. And I think both parties, if you're dealing with a PPP loan, this will have to be on both buy side, sell side. So sell side legal, buy side legal. They both need to have knowledge of what's happening. They both need to be looking at it because both sides are going to be involved. And here's the reality. Every intermediary on this call will know one thing. At the end of all of this, somebody's going to get thrown under the bus. And it doesn't matter if you've told them, I don't review, I don't give advice, I don't do these things. If they think they can throw you under the bus because you were supposed to know, you were supposed to give advice, they will throw you under the bus. And if you don't get,
so let's clarify that. Suit, the potential lawsuit against.
They're going to throw you into a suit. They're going to come after you.
Okay.
You may be able to get yourself removed. I've seen several top-rated intermediaries in this country who had years of experience get sued. They won the suit, but after spending $50,000,
in 3 years of their life.
Yes, so I think here you just do what you know about the stuff, and make sure that you get everybody to look at those loan docs and everybody agree.
Disclose to the buyers, disclose to the sellers, tell them what the ramifications are. Speak to your attorneys.
Yes.
Don't act as the attorney yourself. Don't read the documents and say, "Oh, we don't have to get their consent." Or
that's right.
I mean, for me, you're talking about asset sales and stock sales that you should approach the bank, right? The lender.
All of this, that's right.
Yeah.
And
Okay.
here's something this is a real big issue. Most intermediaries, I'm not going to say all, but I worked with enough now over the years, and I know the profiling. Most of them do. They kind of want to leave this tax stuff alone, not press it. Let those clients deal with it, and many of them will wait till the 11:59 right before they're going to close. And why? Because they just don't want to rock the boat.
Right.
This is not one of those deals. This is not this is a proactive, not a reactive process. You do not let this sit like you might let that kind of stuff sit, because somebody might be able to suck up on the tax if they're going to pay too much and you didn't want them to know, but they will not suck up on this. I mean, so this is one of those deals you got to get proactive and do it at the very beginning.
You don't want to be sued at post-closing, and I can't stress that enough.
That's
so
right.
Get those documents from your seller. Tell them, go get the documents, the promissory note, get that to their attorney or get that to the closing attorney, get legal advice, and don't give the legal advice yourself. Me and Monty are both saying you should. I don't know how to say it anything stronger, Monty, but you should, disclose to the buyer and the seller, and
That's right.
let the attorneys handle it. I had somebody that beeped in here, and they're basically saying, how can the buyer have any responsibility for the PPP monies in this? And I'll give my piece, then Monty can talk. This is the thing is, it's the buyer didn't get the PPP monies, didn't get the loan, but I never think that I would not think the buyer, and I'm not an attorney, I'm not giving legal advice, this is just my gut feeling. I wouldn't think the buyer would be completely off the hook. I know in the state of Florida that if they buy a business, a buyer buys a business and their sales tax due on their sales tax due from the seller, and the buyer buys the business, that the buyer now becomes responsible for the sales tax. They look at it as ends up getting attached to the assets of the equipment. I know that the PPP monies are not attached to the assets of the equipment, but for God's sakes, I say this all the time, the U.S. government is the most powerful entity this world has ever seen. And they can go after and they can do anything they want, and they can change anything at a moment's notice. So I wouldn't play games when it comes to this. Monty, you have anything to say in regards to that?
There's for sure anything you're dealing with that has to deal with the equity transfer of the business, buyers are on the hook. And they're picking that up. Now, obviously, that question would be specific to asset transactions. So is it possible that the transaction could be nullified? I don't know. I mean, is it possible? Is it, if there is an issue that comes up in this transaction where there is a major hiccup through the PPP loan, is there any part of that would potentially get in the middle of the buyer and the seller after it's done that could create havoc in the business? Could it have an impact on any of the employees? You wouldn't think so, but that's why you deal with this and do it right up front. It's a due diligence item for certain, and it's a disclosure. So it's not so much you give it to the buyer's attorney so that they can try to confirm whether or not it's going to, what level of impact will have to be on the buyer, but it's a disclosure issue. This is an issue we have here. Could it come in and could it create an issue? And think about the simplified process we've been dealing with here, and the fact that we're even having to worry about whether there's a safe harbor and where's in excess of $2 million on loan issues to be reviewed. I mean, look at how much of a flux there is even on that. So whoever would have seen that we would have interim final rules? What in the world is an interim final rule? You know what I'm talking about? Final is final. I mean, so interim final. So we're talking about interim final points right now. So any of those things can come back and hit it. So you just say, play the safe thing. Just go out there and don't get caught. Make sure you disclose and let the legal people take care of it.
Again, whether it's an asset sale or a stock sale, right?
Either one.
And yes, somebody was asking, yes, probably the asset sale, you might have a better chance of getting it done. But again, leave that up to the attorneys to decide, and don't make that decision, and make sure the buyer and the seller know that what the situation could be, that the monies could become due immediately if it's not handled properly.
That's right.
And that they have to talk to their attorneys, maybe not just their closing attorney, but to their attorney.
Yeah.
So they feel safe. So another thing that I'm hearing through the grapevine, Monty, is, and I don't know if you've heard this, I'm hearing from the grapevine right now that the SBA is not even forgiving, not even accepting the applications yet for the forgiveness of the loans. So again, the banks are getting scared because the banks are saying, hey, we don't want to give consent because we don't know what's going on. So if you do have to go to the bank for consent on the loan, the banks are saying, we don't want to give consent, to let that transaction happen. This is happening all over the country from business brokers. They're going under contract. They're working to closing. They're a week before closing. The attorney's saying, we got to get consent from the bank. And then they go to get consent from the bank, and the bank's saying, no, we're not giving consent, or the bank's not answering their calls or answering their emails.
Yeah.
So you can't close on the transaction. So, what I've been telling my sellers in my company is that we're telling them, as soon as you can, apply for forgiveness on that loan. Apply as soon as you can. Now, we know that it could take, the SBA is allowing up to 6 months to give that forgiveness, but still try to apply as soon as you possibly can. But from what I'm hearing through the grapevine right now is that the SBA is not even accepting applications for the forgiveness because they don't know what to do about it, that they need more wording. And is that what you're hearing too, Monty?
Yes. I haven't even dealt with a client yet who could come to me and show me that they got a forgiveness. I mean, I'm sure they're happening.
No,
I haven't seen them.
I guess the SBA, the banks can't do it.
Yeah.
And the SBA is not accepting, even from what I'm hearing, they're not even accepting applications for it.
Yeah. So I've heard some of the same stuff. I haven't seen any that have been done. And when they started coming out talking about the extended time frames for this forgiveness to possibly lag up to, I'm not surprised. Look at how fast all this stuff rolled out. Now they're at the meat point. Okay, you got the money. Now we're at the rubber hits the road. Who's going to actually not have to pay it back? And so that's why they're dealing with this safe harbor potential at 150,000 and down. They got to do something to get the small ones out of the way. And there are a lot of them that are real small that they can just give a few checkpoints and probably go. But yes, no, I've seen that. That's exactly what I've been hearing.
So this is the situation that we're in, guys. To wrap it up, on this point, is that we're in a situation as business brokers that we need to get the documentation from the bank on where they got the seller got the PPP monies, get determination if we need consent or not get consent. Chances are that you might be in a situation where the bank's going to refuse consent because they don't feel like they have the authority to do that yet, or they're going to ignore your calls and your emails altogether, and you're trying to close a transaction, remind you. And the SBA right now is not even accepting the application for forgiveness, and they're not even communicating any of this stuff to the banks because they don't know what's going on. So this is causing a huge situation for us in this industry. And if you haven't personally experienced this right now, and I hope that we have brokers that will raise their virtual hand in a few minutes, and they're going to tell us some horror stories of what they've been through so that the rest of us know what's going on. But if you haven't been through this, there's a good chance that you're going to start, if you've got deals going on, this is going to start popping up for you. And you're not going to be able to close on these deals because of this. And this goes back to what I was saying in the beginning of this webinar. This is the most important thing that we can be doing as an industry right now, is coming together. I'm talking the IBBA, every state and regional association out there, business brokerage press, all of us should be coming together really hard and pushing to get this petition that's coming out signed. I'm having, again, Deborah Carmen, great attorney in Florida, fantastic attorney. She's drawing up the petition as we speak, and I'm going to get it out to everybody, and everybody sign that petition and get everybody else that to sign that petition, because we've got to get clarity on here so that we can close these transactions. And if we all don't do anything, we just sit back, we're all going to be trying to make deals happen. We're not going to get them closed. The seller's going to be stuck with the business. The buyer's going to be sitting there going, I want to buy this business, but what's going on? And as us as business brokers, we're going to starve. 4.3 million businesses got PPP monies. This is something that's going to affect us, and it's going to affect us hard. So please sign this petition when it's all done. We're hoping to have it by tomorrow morning. Please sign it. Monty, do you have anything to add to that? Or
no, you got to have the voice.
But
you got to have the voice, and that's right. With that many loans that are out there, look at the problems that are coming down the pike and how many people have needs. So it's same with anything. Nothing's going to change here without a voice. Just like the forgiveness piece of this, or the income deductibility, the expense deductibility that the IRS has come out with. Nothing's going to change that unless there's a voice. So it's going to take everybody jumping in the middle of it and putting the voice out there.
And we are going to be the voice, right?
Yeah.
Me, you, everybody that's listening right now, every state and regional organization, the IBBA, hopefully M&A Source, everybody. I haven't contacted everybody yet, but I'm going to be. We got to pull together, and we got to make this happen. We really do, because we've got. I don't think people know that this is going on, and we've got to make it an issue. We got to raise our hand and say, "Hey, we got a problem here. We know it wasn't intentional, but it needs to be addressed."
Right.
So that's all we're trying to do. Okay, so I want to start getting people to raise their virtual hand. So, please in the chat box, explain to other people how to raise the virtual hand. Me as the host, I've never figured out how to do that. So please write in the chat box how to do that. Raise your virtual hand. What I'll do is I'll chime you in. You'll see your name come up on the screen. And when you see your name come up on the screen, unmute yourself. Tell us where you're from, please, and then, ask your question or make a comment. Please keep it to, 30 or 45 seconds, and that's it. So let's go ahead and begin. We're going to first get John in here. John, are you there?
I'm here.
Great. Where are you calling from, John?
From Los Gatos, California.
Well, thanks for joining us.
You bet. I've got two transactions. One's an LLC membership transfer of interest, and the other is a stock sale in a sub S. And one's scheduled for July 31, the LLC, and I'll be on the horn to the lawyer on that transaction right after I get off here. But what is the best way to protect both sides? Is a holdback for the amount of the PPP a good suggestion for both of those sellers and buyers?
The crazy thing that's happening here is the buyer is picking up responsibility. This is one for absolute both of yours. If they're both equity deals, which I understand.
Right.
Yeah, both of yours for sure being an equity deal, the buyer's taking responsibility. So I would be surprised if the seller, unless they were forced to by the lender, would allow themselves to stay there in the middle of that and be held responsible. But the seller should also be concerned that they were the ones that originally filed for the thing. So even though they don't want to, I believe they're caught making sure that that being in the middle of the deal. So that you're already on track. You've got to go to the lender. The ownership change is going to be an issue that needs to be addressed. If the lender is going to allow it to fly, then I think the parties need to make sure that there's going to be adequate dollars there to cover anything that they think would not be forgiven. So this is where the accounting should come in. There should already be clarity if they already see it now. They should already have clarity if they've done enough to know how much of this was going to be forgiven or if it's going to be forgiven in full. So whether or not you have a complete escrow for the whole thing, that's a little large. Probably having something set aside if there's any concern that a portion of it won't be forgiven, then that portion is still available to get paid back. And I think the seller needs to be concerned about that, because I question whether the lender is going to release them completely, even if they let the deal go through. I guess there's a chance. If the deal goes through and the seller's off the hook completely, the buyer's the one having to deal with it.
But you're saying, Monty, I'm sorry to interrupt, but Monty, they still have to go to the lender and they have to get consent or acknowledge, hey, we're making this, don't just put the money in escrow, close on the deal.
No, you got to go to the lender.
Before you close and let them know what's going on and get the consent.
Yeah, that's why John
get consent.
Yeah, that's why John now is. Yeah, that's why John now is talking about going to getting his legal involved. He needs to get back to the attorneys now and then take it over to the bank. The bank's going to have to know this is happening. So they've got to give their approval to go ahead and let this transaction go down. So that's something that really has to happen. Then if the lender was willing to let that happen and release the seller from any responsibility, and the buyer steps in and takes responsibility, well, hey, I don't know if you have to worry about putting an escrow up or anything, because now the seller's off the hook completely. But if the seller is on the hook, I think you need to have something there and or do what the buyer or do what the lender requires.
Well, if the buyer's now on the hook for getting forgiveness and he can't get the forgiveness, why isn't the sellers shouldn't be still on the hook? That's
the challenge. Most of the time when these deals happen, sellers want to be completely off. But I think from a buyer perspective, I wouldn't want that.
Well, I'm representing both sides in both transactions.
Oh, you got a challenge. You could do no good because you're going to be in trouble one way or the other.
Bring the lawyers in, John. Bring the lawyers in.
Absolutely.
Keep yourself away from it.
Yeah.
All right, great. Hey, thanks for calling in, John.
You bet.
Okay, let's see. Let's bring Dawn in. Dawn, where are you calling from?
Calling from Boulder, Colorado.
Dawn, I appreciate you calling in. I know you and I have been going back and forth all week by email. I think we've sent each other like 10 emails this week. You want to tell everybody what's going on and what you're experiencing?
Yeah, well, really quickly, $2.5 million sale of an S Corp as an asset transaction. Motivated buyer and seller both want to get it done. Buyer is particularly interested in meeting that September 27 deadline because they're going to get an SBA loan. They'd like those first 6 months forgiven. Given the deal structure, that's probably $125,000 to the benefit of the buyer, and could make a difference in getting the deal done if it's not by September 27. But we won't have the forgiveness by then. The money came in the second tranche of funds, probably will be fully spent and accounted for by September 1st. And then it goes into that long process that Monty was talking about that nobody knows the end of. So we have this conflict between buyer motivation and seller motivation. Seller's PPP loan is $300,000. Not going to let that go.
And you're Dawn, and I apologize. I've talked to different brokers about, different scenarios. So in your situation, the attorney has said that you need consent from the bank and the bank's not willing to give that consent. That's what was going on, right?
No, not necessarily. The bank has said they have to give consent, even though it's an asset transaction. They've claimed that it's an SBA rule, which I don't think is true, but that's their claim. And they've said they probably wouldn't give consent. That's what the bank has said. We're just sort of beginning the process with the attorney to try and unravel that. And as Monty has brought up today, if it's an asset sale, you may be able to get past that, but that'll be for the attorneys to arrive at. We want to engage both the buyer and the seller attorney. They're going to have to arrive at some sort of mutual consensus on that.
Yeah, don't brush it under. I know you wouldn't do it, Dawn. I know you wouldn't, but the brokers that are listening, don't. Again, Monty already said this. Don't brush it under the table.
Right.
like tell the seller and the buyer, talk to your attorneys about this. We have this situation. If your attorneys say it's okay to go ahead, let's go ahead and do it. And the last thing we want to do is bring attorneys in on this matter. It's the second to last thing we want to do. The last thing we want to do is get sued post closing. So,
and that's an oddity. I think that's why you got to have legal involved, because if they're claiming it's an SBA deal, you really go back to the docs. What do the docs say? So I think the attorney's going to have a lot to deal with on that. They can't just go to the ambiguity of everything that's out there in the regulatory world. No, what's in the paperwork?
Absolutely. And so again, the loan documents themselves are a little vague. It says any change in the business. So who knows what that means? It does not have a specific about selling it or anything like that.
Yeah,
but that's a change, I would say.
I'm
not an attorney, but I don't know. I don't know.
Yeah.
The attorneys are going to have their work cut out for them. That's for sure. Hey, Don, I really appreciate you calling in, buddy, and it's been great going back and forth with you.
You bet. Thank you, buddy.
Yeah.
Okay. Hey, Wes, are you with us?
I'm here.
Great. Where are you calling from, Wes?
I'm in Atlantic Beach, so Jacksonville, Florida area.
Okay, great. What's your question or your comment?
Yeah, I appreciate it. Thanks for joining us, Monty. I have a transaction that the buyer is utilizing an SBA 504 funds for, and the seller had a PPP loan that they haven't utilized yet. They have the monies, and so we have the SBA, working on the loan on the other side. So how does that affect either side? And it's an asset sale. So is the buyer, what would he be responsible for, or what should he look out for? Obviously, I'll get with the attorneys and kind of talk through this, but what should I expect there?
So the seller has an existing PPP loan that has not been utilized at all.
Correct.
And is there a necessity to even use it?
Probably not.
Then in this one right here, I think it's clean cut. I think they give just get out from underneath the mess. They pay the loan back.
Okay.
They pay the loan back. They get that cleared out, and then the buyer is and it makes sense because the buyer stepping in doesn't have to get caught up in any of that. They can get the deal done. The buyer is going to be able to get some SBA forgiveness on their side.
Right.
So no, I think this is one where if they don't need it, they just pay it back. And really, that's the spirit of what the PPP was about anyway. That PPP loan was not about getting money to people that had no purpose in getting it. It was about getting it to business owners that had an absolute need to take care of their employees and keep the doors open and be able to take care of their livelihood. And some people applied thinking they would need it. Later on, they find they don't. And then they're caught. Should I try to spend all this or what? No, just give the money back. Let somebody else have access to it. So that's probably what they need to do.
I do have another one that did receive PPP loans and has used most of it, and it is an SBA deal as well. Is anybody finding that SBA is not? I know that's a question on the SBA application if the business being bought has gotten a PPP loan, but is that preventing SBA from financing these businesses?
No, from the lenders that I'm talking to, no.
Okay.
No, they just need to know when they've got, it depends on the bank, but most banks either have a 1 page, and I've heard some banks have 4 or 5 pages of disclosures for COVID-19, idle things, PPP, all bunch of different stuff that they need to disclose. But just as long as they know what's happening and they can handle it accordingly, they're still doing loans. Is that what you're hearing, Monty?
Yes. Yes.
Okay, great.
Great. Hey, thanks for joining us, Wes. Really appreciate it. Joe, are you with us? Joe. Okay, Joe, I'm going to go ahead and I'm going to bring in Greg. Okay. Greg Carpenter, can you hear us?
Hi, I hear you guys fine.
Excellent. Where are you calling from, Greg?
San Jose, California.
Well, thank you for joining us.
And my question is I think you covered it, but I didn't quite get it. You talked about they're not allowing double dipping. And my client wants to know, gee, we got this $500,000. We paid our, the required expenses with it, the payroll, the rent, et cetera. And they want to apply for forgiveness, but they're saying, hey, wait a minute. Now they tell us we can't deduct those expenses that we paid with the PPP money. Is that the case?
Yeah, that's where it is right now, Greg. The Internal Revenue Service came out fairly quickly on this point, and it's the denial of double benefit. It's just a standard theme in the regulations that if you, as an example, get a credit or a deduction from in one place, you don't get something that gives you equal benefits somewhere else. Where we see a lot of this is often where you have a credit that's given to you, like a reimbursable credit. R&D credits are great examples of that. You can get certain credits, but you're not also allowed to take an expense deduction for the same thing. So it's denial of double benefit. The IRS immediately came out and they said, if you are not recognizing income related to these funds and you are using those funds to make expenses, to pay expenses, you cannot take the expenses as a deduction. You did not have an income stream for the money that explicitly was provided to you, so you are going to not get the deduction. Now, Greg, this is where we were talking earlier. This is a loan, okay? So it's a loan that ultimately can be forgiven if you meet certain criteria. So if it either is an absolute free thing or it's not, but it's a loan from day one, and you have to meet certain criteria to get it forgiven. So when you meet that, now you have income. You do have an income item for debt forgiveness. The thing is, you do not have a taxable income for debt forgiveness. So you got an income item, it's just not taxable.
Okay, that's where they were getting confused. They thought they were going to have to pay tax on the debt forgiveness amount, as well as not being able to deduct the expenses they paid with it.
Yeah, no, that's the whole thing here. Since there is debt forgiveness, if they qualify, they don't have to recognize the income. Then for the debt forgiveness, then the IRS says you're not going to get a tax deduction. I don't concur with the deductibility issue. Others do not, but This is where we were talking earlier. No, I don't think one person should stand that issue alone. If the IRS says you can't get a deduction, you just don't take it unless you
Okay.
have the support of the Congress to come in and make a ruling on that to let you do it.
So the way the rules are now, you don't get to make a deduction for the expenses you paid with the PPP money, but you also don't have to report it as income either, right?
That is accurate. Yes.
Okay, cool. Now I got it.
Yeah.
Thank you.
Excellent.
Okay.
Excellent. Okay, so before I go to Matt, be ready to unmute yourself because I'm going to come to you in a second. Before we had a comment in the Q&A, and I asked you guys, please raise your virtual hand, and I can bring you in to talk instead of just typing it in. But somebody made a comment saying that they're sure that the bank will give a consent as long as you leave money in an escrow account. That is not the case that I'm hearing from brokers all over the country. They are proposing leaving monies in an escrow account and then approaching the bank and they're asking for consent. Some banks are giving that consent. Other banks are not responding, and other banks are saying we're not going to consent to that. And the thinking that what might be the reason for that is because the banks are worried about staying in regulations with what the SBA wants. And you got to remember, we're in a situation where the SBA is not even accepting applications right now for forgiveness because they don't know what to do. So they don't know what to do. The banks don't know what to do. And everybody's just saying, hey, we don't want to get in trouble with anybody. So just letting you know that is a situation. And if the bank does give consent and the money's left in escrow, you got to make the seller realize that, they could, at some point not get the forgiveness. Now, if they did everything right and they really used that money for payroll and they really needed that money and they were truthful in the application, they'll probably, hopefully get forgiven, but, they need to know the consequences.
Yeah.
So, Monty, anything to add to that? Do you
No, that's
disagree?
right on. That's right on the point.
Okay. All right. Excellent. Hey, Matt, are you with us?
Yes.
Great. Where are you calling from, Matt?
Calling from Boise, Idaho.
Oh, well, glad to have you on from Idaho, Matt. What's your comment
thanks.
or question?
So I've got an offering that this gentleman was highly impacted by the COVID. He got the PPP in a loan, but his business was required to be shut down. So in the interim, to stay afloat, he was using the money to basically start a sideline business to off of that business, so to speak. It's to do a frozen pizza type deal so he could deliver it to people rather than having them come into his restaurant. So now I'm wondering how that's going to complicate, this, because the business is for sale and he wants to separate that business, the frozen pie pizza, from the restaurant. But he's using the money that was from the other that was, based on the employees and such of the other restaurant. How do I?
Matt, did he do this other business underneath the same entity?
Yes, up until he decided he wanted to split it off because he thought it was going good. So he started down the road of splitting it off from that, forming another legal and separating the books. And
okay. Now, when he used the money for this other business, how was he using it?
To buy equipment and pay employees and his existing employees that when the restaurant was shut down, he just moved them over.
The thing on the PPP is they're going to tie it back to the same legal entity, the same EIN. And if those employees are all meeting the FTE requirements for what he had before, you got to have the equivalents. So you got the full-time equivalents. As long as that employer, that entity, I think if he used it right, if he used all the money and spent it the way he was supposed to in the categories, he's probably still going to be okay. Now, the challenging part is he's got a division. He's got a lot of business that he's doing underneath this legal entity. Now, whether or not he can transfer that out, that's got its own challenges. Okay. There's still tax issues related to that. But if he can show that all these employees were paid that he used the money to be expensed or used the money the way he was supposed to, he can still qualify for forgiveness. You still got the same problem with the lender side. If the buyer's going to come in and buy, you still got to go to the lender and get an approval for them to get this thing done. That's for sure. But he can still qualify for forgiveness even with what you're describing.
So it's tied to that EIN, but that he's going to create another EIN for all the income and expenses for that company, but the loan is tied to the EIN of the restaurant.
And that's where he paid everybody, and that's where he's continued to do his business till now. I'm not saying that his desire now to carve off something in there and move it out is necessarily the best solution, but if there is nothing wrong with a business selling a line of work. So if he's got a couple of divisions there, he could actually sell one division and keep the other one actively going, or he could try to do, I guess, what he's doing now. Key thing on the PPP is if he's continued to maintain employees underneath the same entity, the same EIN, and he can show the expenditures that he covered with those funds underneath that same legal entity, meets the criteria for forgiveness, he can still get this thing forgiven.
But then I've got to handle it on the brokerage side as that if he's ran any of those funds through the restaurant business, I'm going to have to do the same thing, put a block out there that X amount of dollars came in on the PPP and there's the expenses for it.
Yeah, there's nothing prohibitive about him having use of money for restaurant specific versus this pizza delivery thing. There's nothing prohibitive as it's underneath that one entity. There's nothing there that would cause him not to be able to do that. But yes, you will have on your recasting, I think you've got a couple of things. One, you got recasting problems for where he is showing the activities for this new division that he created. You're going to have to deal with how you recast that, because you're going to have to separate it somehow from the restaurant. And then you're going to have the one-time effect for some of the expenses on the restaurant that you're going to have as a one-time add back. So those are all real issues you're going to have to face.
Monty, it's 3:08. Do you have another 10 minutes or 12 minutes, or do you have to go? I know you're an extremely busy person.
No, I'm fine.
Okay, great. Sanjay, are you with us?
Yep, I'm here, Jim.
All right, great. Where are you calling from, buddy?
From Boston, Massachusetts.
Nice. So
yeah,
what's your question
really,
or comment?
Getting really nice here. So I have a transaction where the promissory note says that the bank's consent is required for any ownership change. However, this is an asset sale, so technically not an ownership change. The seller applied for the consent, is willing to let the PPP money stay in an escrow account until the forgiveness happens. However, the bank is ignoring and has no response. The buyer, of course, is under pressure because of September 27th, wants to take the SBA loan benefit, the loan forgiveness benefit. And the question is, in case the bank does nothing and September 27th is upon us, and the buyer chooses to move forward with the transaction by putting the PPP money in an escrow, would the buyer be taking any risk, or it should be okay from the buyer's perspective?
You know, this is the challenging issue with these transactions. This is certainly one. This is probably similar to a couple that I've seen come across my desk. There was no reference whatsoever to anything other than equity changes, ownership, true ownership equity of the entity. There were no references to change asset transactions, no limitation on that. And legal came out and said, we're going to close this deal. So they closed the deal, made provisions between the buyer and seller to have escrows appropriately set to cover what they expected may potentially not be forgiven. That was an internal thing. It wasn't anything to do with the lender. And so they went on ahead and closed the transaction. So I think you could possibly be staring down that same issue, but I believe you absolutely need to get legal on the seller side for sure to agree that they are giving their thumbs up for it. Because if you can't get their agreement, then you're hanging out there on your own. You don't want that.
Yeah, get the promissory note language from the bank. that they got the PPP monies from and turn it over to legal and let legal decide if it can close or not. And,
Yeah.
you know, don't try to hide it. Don't try to, hey, we're going to close without letting the bank know, or just follow the legal advice, I guess.
But I'm not seeing that the buyer has any exposure there. I'm not seeing that. I think the seller's the one that's got the biggest issue. This is an asset transaction. So the
Yeah.
seller's got the biggest issue.
Yeah.
Yeah,
Well,
in
they're
this
leaving the
case,
money in escrow. They're leaving the money in escrow account. So, you know, if it did have, if it wasn't forgiven, the money would be forfeited and used to pay off the
Pay it
PPP
back.
money. So, you
Yep.
know, the buyer would be fine. It's the seller that could, the moment that closing happens, that money could become due immediately, and he might lose the forgiveness on.
Of course, that's assuming that they find that they breached something, which if there's no reference to it in the agreement, I mean, in the loan doc, well, I don't see how they would.
Yeah, in this case, I'm representing the buyer, and the buyer was concerned whether they would be stepping over anything or taking any risk if the bank doesn't give the consent. But sounds like the buyer should be okay.
I would talk to an attorney.
Yeah, buyers should be talk to the legal, but the sellers for sure got exposure. There's no doubt.
Great. Hey, Trish, how you doing?
Hey, I'm doing good. How are you, Jim?
Doing fantastic. Trish is calling from Central Florida. What's your question or comment?
I am. Okay, I just want to make sure I understand. So we're talking about the adjustment to the income statement. I'm sorry, to the P&L. So when they've taken the PPP money and they've spent it on expenses, like paid rent, they've paid help, that we need to add that back as an expense. Go through that again. I'm sorry, I just sidetracked at the very beginning.
Yeah, the issue here is that there's no income recognition for this loan. If it, once again, the appropriate accounting for this is it's on the balance sheet. So if there's no income there, recasting that back for presentation purposes should happen. I'm not saying everybody's going to agree. That you may have arguments with buyers that want to argue whether that should be there. Lenders may, but you're going to have it in their face, have the add back, show what the cash flow would have been without those expenditures there, because you're using money that you can't show as income. So there's a legitimate reason to pull those off. So you'd have a one-time add back at the bottom, subsidiary details showing what all that's for. But for example, if it's 300 grand, well, you have a subsidiary detail somewhere showing what that sums up from. But you have one line item down there in the add back section for one-time events, and it adds back and brings your cash flow back up.
Okay.
And then you're not only disclosing to the buyer what's going on, but it also, you know, creating a situation where the percentage of the cost of goods versus gross sales and the labor versus the gross sales, all that comes into play, and you can see what the percentages should be. You know, realistically. Excellent. I think that that is it, Monty. I really appreciate, that's all the questions that we had with virtual hand. Monty, I really appreciate you joining us today. I was very excited for you coming on, because I know you're just a wealth of knowledge, and business brokers all over the country and in Canada hold you in very high regards. And it's an honor to have you here today.
Well, I appreciate the opportunity. It's the industry's been hit. I think as many people who can come out and help each other, help this profession, that's what we need to do.
Fantastic. That's a great attitude. Thanks for giving back to our industry.
You bet. Appreciate it.
Hey, everybody. So this is the most important thing right now, is that I hope you see the situation that we're in as business brokers right now. We're in that situation where we have 4.3 million businesses under, that have got PPP monies. We're in a situation where they're at that point right now where they are using that money up and they can get their forgiveness on that. But the SBA is not giving forgiveness on it right now because they don't know what's going on with it. The business owners, they got the PPP money through the banks. If they want to sell their business, we're in a situation where we might need consent from the bank in order to close on the business. Even if you put the money in escrow, you may not get that consent. You might be okay, but you got to talk to an attorney. It all boils down to this. We need more clarity on what we're going to be doing, because this affects all of us. Like I said in the beginning of this program, it doesn't matter if you're selling $50,000 businesses or $10 million businesses. It doesn't matter if it's SBA loans, owner financing, or all cash. It's going to affect us all. So we really need to get this petition signed. Please, I'm going to send you out a link tomorrow or Saturday. Please sign the link or sign the petition. It'll take seconds. It's literally 30 seconds, and get everybody you know to get this signed. This is the one situation that all business brokers, everybody that's related to our industry, needs to get on board, and we need to get behind this and get this petition signed. So that's it. And until next week, I just want to say, work hard, work smart, and keep making those buyer-seller connections. Thank you.